Hi, this is Marc Boiron. I'm a partner in the financial services group at Manatt, Phelps & Phillips, and I am here to talk about and moderate a panel on developing crypto law and global policy. So we've got some great panelists here with us, and why don't we go through and get the short introduction, maybe just a 30-second introduction on each of us. Why don't we do that in alphabetical order, starting with maybe Caroline.
Thanks a lot, Mark. It's really great to be here. I'm Caroline Malcolm. I head the Global Blockchain Policy Centre at the OECD, and our work really aims at developing a global reference point for policymakers all across the world on DLT and its applications.
I'm next, I guess. I'm Chen. I'm the Chief Operating Officer of Solidus Labs. We're a software company based in New York, specialized in crypto-native risk monitoring and market surveillance solutions. Our solutions are tailored to detect market manipulation, market abuse, and other malicious activity in digital asset trading. In practice, we work with exchanges and other crypto service providers to help them comply with regulation, apply for licensing, and of course, protect their investors. And we're increasingly also working with regulators to detect market-level risks and challenges unique to crypto markets like cross-market surveillance. Stop here and happy to elaborate.
I am Matthieu. I'm the General Counsel of Blockchain Valley Ventures. It's a venture firm focused on blockchain in Switzerland. And I'm also heading the Blockchain Lawyers Forum in Switzerland, which is a group of lawyers. We talk about regulation and very hot topics in law in Switzerland and globally.
Is it me? My name is Rebecca Rettig. I'm also a partner at Manatt, Phelps & Phillips. I'm in the financial services group. I do litigation, regulatory enforcement, and regulatory counseling for blockchain and crypto companies, and have been working on DeFi very intensely for about the past 18 months or 2 years.
All right, so since we are talking about crypto law and global policy, I think one of the bigger kind of global events that has happened, at least in the last week, relates to BitMEX. And you know, while we're talking about a centralized entity, I think it's pretty clear in terms of how those regulations would be applied and should be applied to them, at least with respect to the US. It would be great to get each of your views from a global perspective on when you're talking about something that is more decentralized, whether you want to connect it to decentralized finance or just decentralized applications and networks in general. How do you think about how regulations should be applied? Especially in the context of derivatives, but even in general, like how should we be thinking about, kind of legislation and rules applicable to crypto at a global level?
Should we just jump in?
Go for it.
So, I mean, I think the decentralized question is fascinating, but it's worth starting with, as you mentioned, centralized exchanges where most of the crypto trading volume is really still concentrated today. The way we look at it, at this point, there's no question that crypto and digital assets are here to stay. Really, the question is, what is it going to take for them to grow? And I think it's been clear for a while, and if anything, the BitMEX charges made it even clearer that compliance is one of the key pathways there. Both, first of all, because that's what would be required for institutional, meaningful institutional engagement to be there. Those institutions would need to feel comfortable that the regulatory risk is not too high, and second of all, because if you look 2.5 years back, the CEO of Kraken said quite openly, the crypto traders don't care about market manipulation. Not that long ago, right before COVID started, I heard a senior Josh Goodbody, one of the growth leaders at Binance, not an exchange that is particularly catered towards regulation, say in a conference that market surveillance is extremely important. And if you combine that with the amount of regulatory developments just in the past month, it's no question that, whether you're operating a centralized or a decentralized exchange, you're going to need to fit in some sort of regulatory framework. And so in that sense, compliance enables growth in this space. And in general, when it comes to decentralized exchanges, the real question is how can you, keep and maintain their merits, the merits of decentralization, while also making sure they fit with regulatory requirements. I'll also add to that I've been repeating this joke in a lot of different panels, so I hope no one here heard it before, but the bottom line is that there's a reason I believe that people don't vote for libertarian governments. Yes, decentralization has merit, but people also want to know that there's some sort of framework that protects them. And that's a challenge for decentralization. We work with decentralized exchanges in order to address this, now and also looking forward on a technological level.
Maybe I can jump in here because on the word of technical, we've developed something with different firms in Switzerland, especially in the centralized exchanges and brokers, what we call the Open VASP network, and it's basically a decentralized network where we comply with the travel rule, which obliges each exchange to when there's a transfer of, in the US I think it says of $1,000. To actually provide also the information about who is transferring this monetary mass, right? And so what it has done is basically, while respecting the privacy of each participant, it has enabled in a decentralized manner a multitude of participants to basically combat anti-money laundering and comply with regulation. And I think that's an interesting pathway towards decentralization of regulatory systems that allow for the entire industry to be more respectable.
I think the travel rules are a very good example, Matthieu, because I mean, we have a couple of things going on. One, as Brenda said, the issue of compliance, so the need to comply with existing laws, obviously, or exist. What we've seen, of course, happen with the FATF rules, which of course are housed here at the OECD, around, and this is really a question we're seeing more broadly across the crypto and DLT space, which is, to what extent, there's obviously the need to ensure compliance with existing regulations, but we're also seeing regulations also evolve to emerging developments in industry, and just how far that goes. So this is we're in that really transition period where you've got the existing rules, which in many ways we talk about them being tech neutral, but I think when we really look at DLT, some of the things that it's capable of and some of the structures it's possible to set up, particularly in the fully decentralized systems, really challenge a lot of the underlying assumptions for how those regulations actually work and implement in practice. And the main one being, of course, there's no real person to put these obligations upon, and there's no real person to make sure that they're actually complied with. So I think one is definitely compliance with the existing rules, and we've seen a strong push for that. I mean, the BitMEX case is just a key example of that. Secondly, though, is clarity around regulation. FATF, of course, brought out its rules and sought to apply the travel rule in this space. Easier in some protocols, obviously, than in others, and in some exchanges than in others. But that's that question about, how much evolution should there be? And I think the third point, which is quite interesting, is kind of the global aspect. How much of this can be done on a jurisdiction by jurisdiction basis? Or is this something we really need to be thinking, to really be effective? Do we really need to make sure that these regulations, maybe not harmonization, which is of course the proposal we saw out of Europe this week, at least in terms of Europe is concerned, but maybe even sort of coherence between the different rules, so that kind of gaps that might exist don't kind of create more risk and don't put at risk, I guess, the greater growth of the industry, which I think is probably something that, many of the players are looking to occur. And you're not going to have that without having a very secure regulatory framework. You're just not going to get the mass that you need to really see this sector grow.
Yeah, and just to sort of bring it back to the original question in terms of, can we take anything away from BitMEX and apply it to these decentralized platforms? I think as much as it's hard to envision what you can, I think the most important thing to take away is the intentionality. So I would say intention and knowledge was a very key factor, both within the civil CFTC complaint, that they knew they were essentially violating CFTC rules and regs. I think the knowledge of needing to be in compliance with the BSA and the intentional flouting of KYC and AML regulations and the need to have a compliance program was very important when you looked at the criminal indictment. But I think there's also a broader perspective about intentionality that we need to be taking from this as well. How do you set yourself up as a protocol? Who is actually acting or has power within the protocol? Do you have an admin key? Are you taking any steps with respect to any transactions that happen on the protocol? And there's also a really big difference between just the protocol being decentralized and having a centralized actor have any role or power, sort of as I was saying. So you have the admin key, or you're building the protocol still, or you're upgrading the protocol. And so your intentionality around how you're interacting with the tech as a company or as a software developer is really important in thinking about your compliance with regulations too, because if you remain involved with the software you developed, you really also should be thinking about regulation, notwithstanding the fact that it's a decentralized protocol and you are a centralized actor in it.
Yeah, that's a really good point. And so I'd like to kind of bring this over. We talked about FATF somewhat and kind of tied to stable coins in terms of, so we talked about, bitmap and, the fact that it's a centralized party and how, laws that apply to them might apply in DeFi as well. And I think, when you look at stable coins, you're seeing, you've seen a massive growth. And some people consider stablecoins themselves DeFi, but I think they're stablecoins is being kind of brought into DeFi a little bit more these days than you've seen in the past, obviously, with the growth of DeFi. So I guess the question is kind of tying FATF into it, but then also kind of looking at the fact that you're basically having a mostly centralized, in the case of most stablecoins, cryptocurrency now moving into DeFi. How do you kind of mesh kind of the kind of policy concerns that exist with this centralized currency existing in the DeFi world?
It's a really good question, Mark. And I think, look, one of the things I think that is being thought about in this policy space is, you simply can't take the same approach with decentralized systems. And also we've already seen examples where, if we think back to Bitcoin early days, attempts to just ban it outright. I mean, this is in terms of effectiveness, this is a very, very difficult thing to actually police, a simple ban on doing something within a particular jurisdiction. So the question then is, well, what is the answer? You can either, ban it, but then, questions around effectiveness of that. When you have something really decentralized, I think some of the kind of reference points that we've been thinking about in this space is, well, how do you think about kind of multi-stakeholder governance? So rather than, and I'm talking about governance here in the sense of, in the regulatory sense, not in terms of governance within the protocol itself, but how do you build, for example, not just having a law, but having, norms, for example, within the community about these are the sort of standards that we are working towards. This is for the benefit of everybody. So establishing more the kind of social norms and things within the community, which are probably going to be more effective in this space than perhaps necessarily, a law which we know in the decentralized space, this is very difficult to actually apply.
Yeah, I think exactly to that point, Caroline, there's been a push in the DeFi space to really think about self-regulation. I think we saw a lot of this back in 2017 and 2018, post-ICO, or even in the midst of the ICO craze, where people were talking about self-regulation. But I think there's a really serious push now for companies to create global standards and for a global nomenclature and to think about how to move forward. And also, honestly, to think about how to make sure they're liaising with regulators, at least from an educational perspective, to make sure that there's understanding as everybody moves forward in the space. Because I think the innovation is it's moving very quickly, and the responsibility part is going to need to move forward with it in order to ensure that there's traction and longevity and, it can really be built out in a meaningful way.
I think it's interesting that you say that there's a more and more self-regulatory aspect coming to the table, and I'm coming back to open BASP because I think it's a typical way where we're taking a next step further than just self-regulatory rules. We're actually coding it into a system that allows to comply with the regulation. And I think that's the route that will be taken and should be taken, because we have a technology that allows us to transfer information, to actually give a certain, you could attach a token or an identifier to a certain asset, which means that it has been verified by a certain party, and everybody can verify that within the system. You have such a broad application possibility within compliance of blockchain as a technology itself, that I think that this is kind of the technology itself is the solution to the problem of non-compliance of certain, you know, very rogue type of systems or coins. So I really think that internationally this should be embraced more, not just from a regulatory perspective, but also from a technology perspective. So an application, a real world application of that regulation.
I mean, I couldn't agree more with everyone. I think one way we like to think about it is that, I mean, there's a combination of two things that are needed here. One of them is crypto native tools, of course, and that's what many other companies are doing in this space, right? Because, you know, we came into this because we looked at digital assets and crypto, and it was clear to us that this is a fundamentally different class of assets. Not to say that it's reinventing the wheels. Definitely in centralized exchanges, there are a lot of similarities, but there are a lot of small and large technical differences. The way data is kept is a big piece of that. And of course, market structures, and of course, the way the market is structured, and if you put in regulation as well, you know, it made sense to us that there's going to be a need for tailored tools that, like Matthieu is saying, is actually taking advantage of the fact that there's an underlying technology here that can be utilized to take compliance to the next level and make it easier rather than a threat. And then the other piece, crypto native tools, is one of them, but it was also very clear to us that that's not going to work without crypto native rules. So crypto native tools and crypto native rules. And that's true both, of course, on the local level. You see a lot of jurisdictions where, more and more jurisdictions where, you know, it started, for example, with Hong Kong with their specific guidelines for crypto licensing that are very, very specific. And you can see it more and more in other places, even here in the US with the recently introduced Digital Commodity Exchange Act in Congress. But it's critical on a global level. I agree. I think OpenVASPA that we keep on going back to is an ideal example. And one, and I'm going to kind of throw the next challenge as we see it. And part of it is the question of market integrity, right? OpenVASPA and the travel rule is really focused on the origination of funds, where money is coming from, and who's transferring it where. There's still a big, you know, let's call it gap when it comes to market manipulation. There are a lot of reports and a lot of reason to believe that a lot of the centralized volume, before we even go to decentralized, you know, is potentially manipulative. And part of the challenge there is the assets are not native to a specific exchange. That's why the SEC here in the US is constantly rejecting ETFs because of a lack of an ability to execute shared surveillance. And that's something that requires, at the end of the day, forming some sort of a global standardization of data. How should exchanges, decentralized, should be keeping their data? So if they want to be part of a shared data repository framework, you know, they can do that. You know, and we've been involved with global digital finance, and I think some of the other panelists have been as well. So which was also involved with the OpenVASP effort, and you know, we are working now with a lot of our partners on another working group that would focus on creating shared surveillance, you know, guidelines and standardization. And I think there are a lot of other efforts in the industry to do the same. And increasingly, you can also see the work with regulators. I think the OECD, in its engagement with the industry, has been really an example for how that can work really, really well, you know, dealing with the travel rule. And I think we'll see more of that soon.
Yeah, so, you know, I guess the one thing that I could say is that the positive thing about volume increasing on decentralized exchanges is that at least if there's any manipulation with gas prices being what they are, at least it's very expensive to manipulate the market. So I view that as a positive thing. But we've been talking a lot about data. And, you know, one of the things that is talked about, I think, quite a bit in the US is this idea of, you know, actually being able to transfer data and rely on that data from one party to the other. Because right now, a lot of US regulations, and I'll be interested to hear kind of, you know, views internationally, actually require collecting your own data at each time. And it doesn't allow kind of reusing the data. And so I'd be interested both in a US perspective, from a US perspective, what that should look like. And then I think from an international perspective, maybe what it does look like and what it should look like as well. So specifically, to make it more specific, should one party be able to rely on another party's data, or should each need to independently collect data? And is there a benefit to using the blockchain in terms of not maybe needing to collect that data a second time if you've already collected it once?
let me just specify, are you talking about KYC data or generally data about about an individual?
KYC will be the most specific ones when it comes to regulatory issues, but if there's any reason to consider other data, that as well. But from a KYC perspective, should we be collecting individual data at each point, or should data be transferred and relied upon by parties?
I think, Mark, I mean, there's a couple of questions. One is, like, should they, and then how is that going to work in practice? I think the reality is, from what we've seen so far, kind of consortia-led efforts to share data around KYC have been effective in terms of improving the quality and availability of KYC data. And I'm thinking there about the three bank, and this is traditional finance, so three banks in a project run by the Monetary Authority of Singapore, collaborating using DLT to share KYC information. That, and the results of that, that study did show that you are going to get better quality information, but having that, and this is sort of dealing with competition law issues, market issues, that desire to really collaborate in that way is a whole different question altogether. I think so. Would it lead to better outcomes? We have at least one example which suggests yes. Is there a market desire to do it? We haven't really seen that yet.
It's interesting that you say that because there's actually an effort between Swiss banks to do exactly that. Because Swiss banks have realized that each KYC they do costs them about $400.
Yes.
But there's problems about sharing this data. One, of course, it's very sensitive data. It's GDPR. You can't just transfer this data without any problems. Second is that you've paid for this KYC. So why should you allow your competitor?
Exactly. This is the market incentive point. Yeah. I mean, yeah.
It doesn't make sense, right? So what they did is basically they have a fee sharing mechanism within the system, which allows them to share the fee according to the according to who is receiving which KYC information, and therefore they don't have to do it again and again. And also, the other problem is that you don't want as a bank sharing the data to know that the other bank knows about your client relationship with that client, because banks basically are, and I guess in crypto it's becoming more and more the same as well. You have a finite amount of clients which are already banked, and so you're basically just stealing each other's clients all the time. And so if you can access the client information of other banks, it gives you an edge to steal that client. And so that's another aspect that's problematic, coming exactly to what you're saying is, I think, and that's where blockchain I think makes a lot of sense, because you can create these type of incentive mechanisms ingrained inside the system. And you can also transmit that data in a way that doesn't hinder this collaboration.
Or you have, the zero knowledge proof thing, where you're going to be able to prove that someone is compliant or update the information without necessarily giving away the fact that they're high net worth individual and they're top of the list to be poached by another institution.
Yeah, I mean, nope. Go ahead.
Oh, thank you, Rebecca. So I mean, I can speak a little more to the trading data piece of it, right, which is very pertinent for market integrity. And I'll say two things. First of all, when we, for example, work with individual clients on surveilling for market manipulation within their system, then, technologically, we don't require them to transfer any PII to us. There are ways to do that. We can still detect malicious behavior. They know, what accounts it's associated with, but we don't necessarily have to have that particular data leave the system. When you're talking at, when you're looking at a market level and really trying to monitor for risks across a few different exchanges, then it's an added challenge. But there are ways to address that, including obfuscation, anonymization, and of course encryption, that really minimize the risks. Obviously, there still is a risk, but that's also where bodies like consortia come in. We are currently involved in discussions around data sharing consortia, specifically for the challenge of shared surveillance. And with the right governance tools, you can make sure that that only when there is a concern, the consortia itself can, through its governance system, decide whether the data needs to be revealed. The other thing I'll say, it's also very important from a market integrity and generally risk monitoring perspective, to not necessarily always separate KYC and pre-trade, trade data and post-trade, because what we see more and more in crypto is that there are new forms of manipulation that oftentimes take place across all of those elements of compliance, and therefore actually being able to look at all the data together, the KYC data, the AML data, the trading data, order book data, etc. Oftentimes you'll notice things that you wouldn't see otherwise. So that's another way to think about it.
And Rebecca, bringing this back to DeFi, kind of where we started, you've got projects that are, supposed to be dealing in data in certain ways, or potentially, whether it's OFAC or anti-money laundering. How are projects in the DeFi space supposed to be kind of addressing issues that come to essentially data collection, but with DeFi projects?
I mean, obviously that's a big challenge, but I don't think, as just to go back to what we talked about at the beginning, decentralized doesn't mean unregulated. And so I think to the extent that you're running a protocol and you're still involved, you need to think about transaction monitoring and how that can actually happen even on a decentralized protocol. There are a number of projects that are doing that and implementing transaction monitoring through a centralized party to ensure that they at least have collected enough information that if it ever comes to pass that, FinCEN, lobs an inquiry or they need to share information, they have it collected. And then if you're running an interface, it's the same that, facilitates access. You definitely need to be thinking about whether you're collecting data or not, what type of data. And I know this isn't exactly your question, but you need to make sure you're also in compliance with laws as it applies to the interface, right? It's not just a website. It also may have features that mimic these financial institutions or access to financial institutions. And so things like OFAC, the BSA, and the like still apply even just to something as simple as an interface, because software is software. So I'll leave it at that.
Great. Well, our time's up. Thank you to all the panelists. Appreciate everyone's time.
Thanks, Mark.
Thanks, Mark.